Well, good weekend, all. Ira Epstein, and here we are with your financial market wrap-up, your weekend edition. So we'll look at weekly charts on this Friday, the 15th of December, 2023. I can't believe it's mid-December, and in 2 weeks, we'll be in 2024. It's hard to believe, I must tell you. I put together a special report, and my reports, please understand, they go on the website for 3 business days. So it's going to disappear very shortly. The weekend I don't count, so you got a free look this weekend, and then it's going off early next week on it because I've already put it up as of Thursday. So if you want to look at it, the report covers in great detail the dollar. And I think it's important because the dollar is what's driving the metal markets, interest rates. It's reflective of what the government policy, what the Fed is going to do as well. There's just so much at work. So the commentary, how I do the report, is you get the charts and I speak over them. This one's about 13 minutes long. And what I did is I went in and I took a look first at the seasonals, but I broke the seasonals down in a very interesting way. I give you first the 30, the 15, and then the 5-year. Explain what they're doing and show you where we're at this point in time over a 38-year period. That's the baseline, 38 years. Then I break it down into those segments so you get to see what they've done the last 5 seasonal years, the last 15, the last 30. I hope that helps you. I really hone in on the last 5. And the reason is, other than the Spanish flu, when is the last time we went through something like we just did with COVID? It's come, it's gone. I think you understand that. Now the question is, where does the market go next? And because I think we're at a pivot in the Fed tight money policy, where we're about to go the other end, you want to look. We know we have the world events. We have wars going on right now, Ukraine and in Israel. We could easily be pulled in. We hope we're not. And so far we haven't been. But it's an awful lot, the money we're spending with the wars, things of that nature. How do you get the report? It's simple. You go to our website, iraepstein.com. Under the word, it's on the top right, research. You can move your cursor up here. That will take you there just as easily. So those are the 2 ways you do it. If I have your mailing address, I've sent you emails on it. It might be in your junk, your spam, wherever it's at if you didn't see them, if you're in my mailing list. And we do cull our list. So might be there, might not, but I think you'll find it very interesting. Okay. So this was the week of the Fed talk of the pivot. We have not pivoted. It's the talk of the pivot. Today, New York Fed President Williams came out and he basically rebuked a lot of what Fed Chair Powell said on Wednesday. He's, number one, happy with where the monetary policy is right now. He didn't hear, maybe he wasn't in the room. He sounded, and from what I read, I wasn't the reporter on it, he didn't hear them talking about when they're going to cut rates. Yet that is exactly what I heard Fed Chair Powell say. And he also said, Fed Chair Powell, he doesn't foresee the Fed having to raise rates again. And Mr. Williams sounded like he's ready to do that if he has to. So we're going to play good guys, bad guys. We're not going to let the market get ahead of itself, but we have done that. It's exactly what has happened. This market, by any stretch, is getting ahead of itself. Understand that. Nothing grows to the sky, and there is a number where you got to be careful. Just what is overvalued in markets? And this market soared. But it's not just this week that it soared. All of November, you soared in the stock market. You paused for 9 days, 8 days in December, and then right in front of the FOMC meeting, you started coming up again. And with that meeting, you took off one more time because of what was said. Okay. But now what do you do for an encore? You have no more real government reports to panic about. We're still seeing problems. Did you look at today's New York Fed Empire numbers, the production in New York? Probably the worst set of numbers I've seen. This was a disaster out of them. The market doesn't even look at the bad news. There's plenty of bad news still out there. We're turning, but we're not completely turned. When you look at the S&P, you were up for the week 2.5%. This is a big gain. This isn't a little gain. It's a big gain. The market's at a new all-time high. Ira predicted over the past 2 weeks, who was that Ira character, that I thought we could get when we flipped over an inverted head and shoulder on the daily charts, maybe the 4650 level, 4700. I'm even surprised you got up there the way that it did. This chart's even more bullish. What if I told you, you could argue this is another shoulder, this is another shoulder, this is the head. From the shoulder, let's call it 46 and a quarter to 41 and a quarter, just for the sake of it. That's 51 and a quarter. Guess how many firms are coming out with a 5,200 objective for next year? This is where they're getting it from. So if you're not used to seeing it, it's called an inverted head and shoulder. I'm redoing my charting course. I had a gentleman write me a question today that got me going in another way. And I admit today I took a good part of the day off. I'm burned out. I need to get 2-3 days of recharge. His question was, are we always up on a Friday in the stock market? I went, nobody's ever asked me that. So I went and did my usual research. Well, I not only found the Friday rule, I found the Monday rule, I found the Tuesday rule, I then found the 50% rule, the 90% rule, and I'm going to have them all in my charting course because I don't think anybody's done that. And it'll give you ideas as to how some of these things work out. Now remember, they're rules. Rules are, and you're going to tell me they're meant to be broken. Rules can be broken, but they're guidelines. And if they're good rules, they're good guidelines. I'll leave it go with that. Suffice to say, this market is what? Well, is it in an uptrend according to higher lows, higher highs? No. Amazing. And I know that. This is a vertical price move. It began at 41.22. It hasn't stopped. And every single week, you have not taken out a previous week's low. You have made this whole time frame higher highs, period. Not an inside week, higher highs every week. 1, 2, 3, 4, 5, 6, 7 of them? You're going to get to the point here where you need to consolidate and get a bit of a correction. Remember, I told you that. You won't believe me. You'll say it's just going to keep going. Maybe it will. I'm not bearish, so please understand there is a difference between looking for a correction and being bearish. When you're over the 18-week average of closes, the red line, I naturally have a bullish bias. Most of my work, there's something I'm coming up with, that's why I have to use the word most, and I'm not there yet. Right now, all of my work says you're only looking for buy signals. I'm devising a way to catch a little bit of a turn. That's the artificial intelligence program we've been playing with. You're at an upper Bollinger Band. What are the odds of staying over the band? 5%. I know you're going to say this is the time it's going to the moon because I hear it all the time. Yeah. Do you know those new casinos that are going up and down the strip in Vegas, and they are gorgeous? I got to go back. I haven't been to Vegas in probably 4 or 5 years. When I go to Vegas, I don't even go to a table. I eat. I go to plays, not the plays, the shows and all. I have a great time there. I love the city. But if you're doing this like I do it every day, the last thing I need to do is sit at a poker table or a craps table or blackjack other than to kill some time. Serious money, not going to happen. I used to go there with my friends that are true whales. I mean, we would go, the dining, the limos were waiting for you. One of them had the room, the Rain Man, remember that room? I mean, these guys were big, not me. I didn't stay in that room. I'd go, I'd see it, I'd be amazed at it. I didn't want to do that, and I'm not a big gambler like my friends were. These guys were insane. At the end, none of them ever really won money. They had streaks, but at the end, I don't think any of them won money. All the way up to the top there, nah, that's not for me. And you're overbought. So as far as Ira's concerned, if you're next to me, you're getting the elbow and you're going to tell me it's just going to keep going. And I'm going to say, hold on. That is not going to keep going. You're up there. You're getting close to an area where a reaction can set in. The Dow, the same. You're overbought. It's a vertical price move. The first time you're over the Bollinger Band, you can go 5 weeks in a row over the Bollinger Band. I don't have a way to pinpoint this is the week it's going to go. I know the zone. You're in the zone. It is certainly not a place where I tell you to deploy new money over a Bollinger Band. Not going to happen from me. The NASDAQ had a little bit of a pullback. It's not embedded. It's overbought, and it's at the band. I'll let the other guy want to own it. And the same will be in the Russell, because I know you're all going to tell me, this is it, Ira. You don't get it. I've waited for this where the Russell's going to come alive. Well, you would have told me the story there. I'm sure the same thing. Remember, forget the events. Same thing. Sort of looks to me like the same thing all the way through as it hits it. You take it on your own. And I am not bearish. It's just not a point to deploy, in my opinion, new money on the long side. 5-year note, the same thing. You're up to the spot. No, this is where you've got froth in the market. Be very careful. This market's ahead of itself. You're going to get pushback now. You're going to hear people in the Fed saying, okay, yes, we're talking. It's December. The market's building in its March. You got a lot of reports between now and March to make a decision on, and you're over a Bollinger Band right now. That's very important. 10-year, the same way. I was watching Rick Reeder today from BlackRock, and he is talking about you can get 6.25% locked in, no risk, on some new funds that BlackRock is putting together, and it's actively managed. Okay, you know, a good year in stocks is a great year, 7%, 10%. We've been seeing years where you can make 20, but it's unusual. People are going to move some money and keep that. That's all I'm saying to you. In the dollar index, no, I'm the bear right now. I'll share that with you. But would I tell you to sell the Bollinger Band? I'm not. I'm prepping you with my report as to what I think is going to happen. I think there's a big, long move coming here. In the eurocurrency, is this where you buy the euro against the upper Bollinger Band? Well, you might, and I hope you do, because I want to be at the other side of the trades when it turns on you, and it will turn on you. The Japanese yen. Let me phrase this to you in a way you're going to get. The U.S. Treasury kept all these auctions. Do you remember in June, Miss Yellen told everybody, the world, how much money she's got to go and get by the end of the year? It was trillion. And she said, we're going to be doing all these auctions. Her auctions acted as further hikes by the Fed. The Fed didn't have to hike. In the open market, as she was putting it out and had to pay up for the money, she was taking the U.S. rate higher and higher across the spectrum, because they were doing short-term and medium-term, a little bit of long-term, but primarily in that area. Well, in the Japanese yen, they don't have to say diddly or do anything. The market's doing their job for them. The market, once it lost its embedded readings, had a tremendous run to the upside. Do I think that they will get away from their negative interest rate policy? I do. All right. And the market is saying that it's going to be very hard to get back under here. Is the market turned bullish? Well, the market's out of the bear trend. I don't know that it's turned bullish. This isn't the bullish pattern. And now that you're right over the upper Bollinger Band, you're overbought. There's a theme we're looking at. Are you seeing it? You're over the upper Bollinger Bands. Be careful. You think you're going to stay over that in Bitcoin. 2 weeks ago, week and a half ago, I started telling you up here, I think it's time to take some money off the table, a lot of it. And the market has fallen back. I mean, you're down 5.5% this week. Don't get me wrong. Do I sound like a bear? That's not what I'm saying. Once this market gets approved, ETFs, even though I don't believe in cryptos, money's going to flow into it. At the end of the day, I'm a chartist. It doesn't have to matter what I believe in. But the market here is in need of a correction. That's all it is. You got an embedded reading. It's bullish. In Brent WTI, can't even get under the 397, so the Brent is carrying the differential higher. You went down to the 200-day average in the Bollinger Band. If you're a regular viewer here, what do I tell you on the first time you get to a 200-day average? If you haven't hit it in a while, it's a big number. The smart guys that have been around this a long time, they're not saying, oh, you're going to go right through it. That is not what they're going to be saying. So the combination of an algorithm where you're going to trade 95% of the time within it and hitting a number that keeps acting as support and you're oversold, tell your neighbor to go short. In WTI, same darn thing here. But these are downtrends. Don't think they're uptrends. This is not where you come in and you say, I'm a hero. I'm going to buy because this is the low. The trend is down. There's time where you take money out of markets and you go to the sidelines, from my point of view. Obviously, I'm not guiding your money and don't want to. In heating oil, well, eventually cold weather's coming. So I'm I have to admit, I'm nervous. This market just keeps coming down here. It's oversold, trying to embed. If it can embed, and it's not yet, I believe, both numbers this week were under the 20 level. Last week, they were over it. But what about the week before? They weren't. So this is the week that you need. But this week, I'm looking for some corrections in markets. Are you getting the impression that that's the setups I think happening? And I think you've got to be on the lookout for them. I could be wrong. I'm certainly not going to fight the direction of price when it's in relation to the 18-day average, but I am going to pay attention to what I'm putting out in your special report. I am going to pay attention to what I tell you in the morning in my subscriber videos, and you should give them a try. When you're on the website, just go to the word research. You're there anyways to see this report. Give yourself... It's like buying a Starbucks coffee. It's $7.95 to try the morning subscriber video for a full 30 days. And in the member login, you can buy it. You can cancel it right away for that 30-day period. It won't renew. Can it be any easier? If it can be, I'd like to know because we'll fix that. I'm Ira. You have a great weekend. I'll catch up with everybody. Next weekend, it'll be interesting because I know I'm going out for Christmas, but I think we're still okay. I'll try to get these out possibly on that weekend. We'll talk about it during the week. You take care.